Well, hello and welcome to the all-new, the inaugural episode of the Money and Finance for Expats podcast. I'll introduce you to the experts in a moment, but it's the Money and Finance for Expats podcast, brand new and very insightful, very helpful, and it's from Fiduciary Wealth Management Limited. And let's bring on the gentleman from that esteemed company in the financial management and wealth management world. Bringing onto the screen for you now, Paul Correa and Matt Penfold from the company. Good morning to you, gentlemen. How are you this morning in Gibraltar?
Morning, Carl.
Morning.
Really good.
All good.
Yeah, good. A little bit chilly today, but we've had a long summer, so we can't complain too much. But
Fair enough.
Good here, yeah.
Fair enough. Well, glad to be talking to you this morning for this very exciting and inaugural episode, as I say, of the Money and Finance for Expats podcast. It's the 21st of November, 2022. This is episode number 1. We would love to have your questions coming in, and we'd be delighted to answer them. We're streaming live to FWM's Facebook page. And this will go up on YouTube as well. So make sure if you're watching later, if you're watching the recording and you're watching on catch up, get those questions in and be sure to make an appointment with Fiduciary Wealth Management via the website. And we'll give you the address to the website in just a moment. We want to find out on this first episode, gents, how did Fiduciary Wealth Management get started in the first place? Why did you start a wealth management company? Should we start with you, Paul, with that?
Yeah, in 2007, we saw a massive opportunity in the underserved space between private banks, which are entrapped in a time warp, slow to adapt to a changing environment and pushing their own products. And then the single transaction financial advisory practices, which purport to offer an independent and customized financial solutions, but rarely succeed in putting together a structured and independent proposition. So that's really the reason. There was a massive opportunity there, and we wanted to take advantage of that. I think you have to go back in time and think back in 2001, the private banks had a business model which was built around banking secrecy. And that was dealt a very heavy blow in 2001 when the EU decided to bring in the EU Savings Directive. And I think over time, it's been dealt further blows. So, between 2001 in 2010, I think it was, Spain adopted the Modelo 720, further reporting. The EU Savings Directive changed over time, and they expanded the range of products and asset types that got caught up by the directive. And then in 2016 or 2014, with an effective date of 2016, came the Common Reporting Standard, which was a global initiative for complete and full tax transparency. Right. So in 2001, in my younger days when I was in private banking, I could see that it was coming to an end. It was very, very clear to me then that tax evasion had its days numbered. And I know we don't want to use the dirty word tax evasion, but frankly, that's what it was. Everyone was doing it. It was common practice. You put your money offshore and it wouldn't be reported, and you'd declare less than what you earned. So the days were numbered. I could see it coming. I think the EU Savings Directive was just the first nail on the coffin, and I thought that there was a big opportunity for setting up a wealth management practice. And then, of course, from tax evasion came the next word, which was tax avoidance, which was the same thing, but it sounded nicer, right? You can avoid tax, but basically you do the same, right?
Yes.
But it's not tax evasion because you just circumvent. Remember, the EU Savings Directive only covered private individuals, so everyone stacked their wealth in offshore companies because it was excluded from the directive. So and then everyone was talking about tax avoidance, but it was clear then days were numbered and tax mitigation was a future, and we wanted to catch the wave early, so to speak. And we decided to set up a wealth management company because there was an opportunity then.
Well, congratulations and well done. So the game was changing, and I imagine you would like to think you're changing the game as well as you come into this and you saw that opportunity to be taken.
No, you continue. You have to adapt as you go.
Yes.
because
Yeah.
it's not the strongest that survive, but it's the most adaptable ones. Yeah.
Okay, brilliant.
So,
We'll come back to you because I'd love to hear a bit more about your background as well. You mentioned experience and your past in the banking world. What about you, Matt? Casting your mind back to the beginning of FWM.
Well, yeah, it's a good question, Cole. I wasn't here for the beginning. So we're the Money and Finance for Expats podcast here, and I'm an expat myself. So the accent is a bit of a giveaway, but I'm from the Midlands, sunny Nottingham. And then 4 years ago, I wanted to make Spain my home. This was definitely my choice and not the choice of my Spanish wife who had enough of the English weather. But
Right.
we made that joint decision. And I worked in financial services the majority of my life in the UK, and for me it is finding the right home to join when we moved. And I think for me it's important, and Paul talks a little bit, and I think we'll cover a bit later, but for me where I work is very important, and you want to be kind of aligned with people with kind of similar values, a progressive firm, a firm that's going places as well. And I met Paul in a hotel in London, and the rest is history, as they say.
Superb. Yeah, and I think we want to know more about your particular edge on this and niche, which might be revealed, and a bit more about your past and your backgrounds as well in the wealth management world. But I'm keen to know why you don't like the way a lot of fiduciary wealth management is reported and the approach of some companies. And for me, from having researched a few podcasts about money and finance management, they're a bit boring, aren't they? Is that your criticism of wealth management generally, or have you got other things to say about the industry?
I have a lot to say about the industry.
Go on.
I think whilst we anticipated the direction of travel in the sense about tax planning being a key component of the financial advisory service, I think we underestimated how aggressively our competitors at the time, medium-sized financial advisory practices, could grow so rapidly with business models which, quite frankly, are and will always be an anathema to us.
Right.
And what do I mean by this? In terms, what we dislike about the current practices, no names mentioned, but the method of expansion, employing self-employed financial advisors, and sometimes even partners. Some firms, large financial advisory practices, their partners are self-employed individuals with companies. So once you have a sales force that is forced to hunt to eat, a couple of things happen. First, whenever they have a client in front of them, they have to maximize their revenues. So they tend to overcharge when they establish a new product, right? Because
Yes.
otherwise there's no income on the table. They can't feed the family. And two, they often resort to tactics like disguising the fees in clever ways, using alien cashman charges and saying that this is the third party provider that is charging those fees. And then they can charge upwards of 7%. And this is not our model. So it really annoys me. And then thirdly, Carl, what I find is that the advisors are not actively listening to the needs, the wants, and the concerns that the client has, because their sole focus is, I'll listen passively, I'll wait till you end the conversation, but I know exactly what I'm going to sell to you and how much it's going to cost
Yeah.
you.
Yeah.
And this is not how we do business. But look, in credit to these companies, they've done extremely well. And
Do you know? I think a lot. Sorry, I think a lot of people fear this, don't they? And from what you say, quite rightly so, that in that I just had a conversation with somebody about Stephen Covey. Seek first to understand and then be understood.
the 7 good habits of highly effective
Yeah,
people.
exactly. And people thinking about what they're going to say while the other person's talking. So people are quite right, are they, in their intuition that a lot of financial product salespeople have already decided what they're going to sell a person before they even have a pretend conversation.
I think it's even worse than that. I think this leads No. Honestly, Carl, this
Right.
leads to my fourth point. I think we have seen firsthand when we are competing for business
Yeah.
how you're dealing with a competitor and you want to do it on a level playing field. You compete on price, on service, on the value of the advice, or the speed of the response. But frankly, when you come with a product which they don't put on the table for the client, then they are prepared to say whatever. The
Yeah.
law has changed and this is no longer. And I've seen awful things from companies that are, frankly, they have a good reputation in the marketplace, but they'll do anything to close the deal. And and what really annoys me, you talked about, the practice. Very, very often these firms have simplified their sales process for their own convenience, not for the clients, for their own convenience.
Yeah.
And they are frankly single transaction firms, and they are a million miles away from offering a customized solution to the client. And we would like to use this platform to create general awareness within the expat community and to give something back, frankly, because
Fantastic.
because I think honestly, I think clients are very often blindsided by the noise and by the presentation, but they don't really know what they're buying into.
And the fear, right? Because I think the
And the,
fear-based marketing is a big part of this, especially in the world at
co-
the moment.
completely. And I will say something just to end on this point. Even if all we do is raising the issue, which which we feel is of concern to the communities that we serve, and even if that doesn't result in business for us, if it results in those firms changing their business models to put the client's interest first, then we would have served a greater purpose to the community.
Fantastic. We got a thumbs up from a Mr. Ward who's watching this morning. Thank you for joining us. If you've got any questions, do stick them in the chat and we will do our best to answer those because we are going to take a look at the global financial situation in just a moment, which is always great fun to do with Paul and Matt. Matt, do you think this is a difficulty with the big corporations? I'm thinking that the way a corporation has to work is to decide on the products and then train its sales team to deliver those because they're working at that scale. They can't be very bespoke, can they? They can't be very flexible or spontaneous and address particular needs. They've decided how they're going to approach it. They've decided what products are going to sell, and then they take them to market. That's the benefit, presumably, of working with a smaller. Would you call yourself a boutique outfit by any chance?
We would, yeah. So, but I think that's a really good point. In fairness, Carl, because yeah, they train their staff to operate in a certain way, and it's very kind of binary. And it's interesting. You said something earlier, and Paul also said, these financial advisors, for other firms, and in my eyes, you can call yourself a financial advisor if you want. You can even have the qualifications that maybe allow you to do that.
Yeah.
But if you're just got one product that you are determined to sell to somebody before you've even met them, which is often the case, then you're not a financial advisor. You're not giving advice. You're just a salesperson.
Yep. Well
And where maybe it is a little bit boring. And we talked about, the financial services, we don't want to be in that way. But for us to say, actually, we've got to look at your situation. We've got to look at everything. We can't say to someone, right, 2 minutes, you should be doing this, because what's good for one person is not so good for the next. And that's how it works. And I think you're right. Because we are a little bit smaller, that allows us to be able to kind of give that service just something a little bit more tailored and more suitable for people, rather than saying, okay, here's a box, I'm going to put you in here, now I'm going to move on to the next guy.
Yeah, absolute numbers game. Right. Before we move on, and we have a great question that's come in. Do you think Bitcoin should be part of a retirement portfolio? That good one. If so, what sort of percentage? We'll come back to that and we'll take a bigger look at the global financial situation because it's an interesting one at the moment with a notable collapse. Can I ask you both just briefly about you so people can get to know you a bit better? What is your experience? What are you bringing to the table when you come to meet somebody? Paul, can I start with you? You mentioned a background in banking.
No, well, I worked 6 years as a civil servant in taxation,
Right.
and then I worked in private banking. So yeah, building private banking teams, serving the expat community for 15 years. I'm a chartered banker or associate chartered banker by profession. So my background is in banking. I'm a qualified banker, and then I moved into the financial advisory space. When was that? Nearly 20 years ago.
Yeah, you were
So
reaching for that, weren't you? Some time ago.
yeah, some time ago with a grey beard, but
Yes.
it was a long time ago. Lost notion of time. But yes, my
All right.
background
Thank you.
is in, and I've been dealing in initially when I was in prior banking. I used to run the the um, the trading desk there for a long time.
Wow. Okay.
So managing balance sheet risk, managing foreign exchange risk, and then giving advice with teams,
Superb.
serving the Spanish, French, and English speaking expat communities throughout the EU.
So, as well as that experience, I mean, in that time, you'll have seen a lot of change of the industry and of the world, of course, in that 20+ years.
Completely, regulation in particular, and
Yes.
new tax laws and new EU directives, and to try and rein in on bad practice. Unfortunately, a lot of directives come, but the firms that don't want to adhere to the directives continue doing what they've always done. So
Wow.
you put cost and pressure on the firms that want to do things properly.
Yes. Well said. Thank you very much for that little insight into your background there. What about you, Matt?
Okay, yeah. So I don't have quite the years of experience as Paul has due
Who
to
does? Who
age-related
does?
issues. That's very true. Yeah. But no, I started in retail banking. Many years in retail banking in different departments. Then I moved and worked for a small stockbroking firm. We were trading short-term investments, which was interesting. Not something that I'd work in again, but very eye-opening, shall we say.
Yeah.
And then I eventually end up in what would be your typical financial services in the UK for a firm there for about 5 years before I made my journey across to Gibraltar, Spain.
Superb. And that, of course, is why the suffix of the website for Fiduciary Wealth Management is .gi for Gibraltar. www. If you want to get in touch and make an appointment to talk to these gentlemen and the company about managing your wealth, fiduciarywealth.gi. So let's move on to that all important and exciting global financial situation. We've had one or two conversations in the past, Paul. It's not got any less exciting, let's face it, right? We have that. You might want to draw in this first comment or question from Randy Ward, as you can see on the screen there. But the big picture, what's going on in the world at the moment?
Should I answer Andy, or should I?
Well, yeah, as you wish, as you wish. I mean,
Well, in answer to Andy, remember that Bitcoin was considered a store of value. 12 months ago, all those pundits in the market were claiming that gold was dead and Bitcoin was a store of value. Well,
yes,
Bitcoin has lost 75% of its value in the
yeah,
last 12 months. So
yeah,
I think that has put to bed the argument that Bitcoin is a store of value. Is there space for digitalized coins and so on? I'm not an expert on the subject, but I think I think we will have digital currencies from central banks the world over, and I think it's going to push some of these bitcoins and others are going to be pushed. Either they'll continue if they've got something of intrinsic value, or they could be pushed out. But yeah, difficult question to ask. I think Bitcoin is still coming under huge pressure.
yes.
I wouldn't be surprised if we see Bitcoin break through 10,000 again.
Yeah, interesting. And the government seem to think that digital currencies are a good idea. There's quite a lot of talk about that at the G20 at the moment, isn't there? So, I mean,
Correct.
it's not over. It's certainly not over, is it, for digital currencies, and a very turbulent space to be watching for. But the bigger picture then, and Randy's saying Bitcoin has lost 75% of its value several times. It might happen again, and it might increase in value, of course, as we know with all investments. It may go up as well as down. But the bigger picture, Paul and Matt, what's going on in the world at the moment? should people be aware of? And how, I mean, we were talking about fear-based marketing before. There's a lot of scope for fear-based marketing, and I think a lot of people in the financial sector do use that approach. I think you take a longer term, and I don't think you're quite so keen to terrify people with your longer term view. What would you say to people who want to learn more about what's going on? What should they be looking out for in the world markets at the moment?
Well, unfortunately, Carl, it's fear that drives the market, fear and greed. And I
Yeah,
think if you look at most investors, they go through different emotions, but they all, fear induced emotions, and the uncertainty, they're going to lose everything, and they can't think through logically.
yeah,
So I would say it's not about timing the market, but timing the market. And I would like to qualify that statement, because
yes,
there are times you have to open the bonnet of your portfolio and look at what assets, because there is um, you need to factor in time in the market to some extent. So you have to look at individual asset classes and say, for argument, to give you an example, take bonds. Is this the right time to have bonds in your investment portfolio when interest rates are going higher? Clearly, the answer is no. Is it the right time to have interest rate sensitive stock in your portfolio with interest rates going higher, like tech and so on? The answer clearly is no. We've seen Apple and all the other Tesla, and they've really lost quite a lot of value in the last 6 months. So the answer to that is no. So of course, you do have to time the market. You do have to a certain degree, open the bonnet and see what's inside your portfolio and say, okay, these asset classes is not the right time to hold them.
mm,
Fine, I get that. But generally, it's a question of having a conviction view on what assets you should hold, and then stay the course, yeah, rather than panic, because you have retail investors selling their stuff, and you have institutional investors just buying lower and lower and lower and making a killing. And why should you do that? You just have to remain calm. You know that the idea of investing is for the long term, is not to check every day and see it's gone up, it's got down, and being jumpy.
mm.
That makes absolutely no sense. If you buy a property in that beautiful, in your neck of the woods in San Joao de Maquinho, yeah,
Yes,
do you buy it today and then 6 months from now go, oh, we've got a
well,
global recession, property prices are down 20, I'm going to
yes,
sell now because it could drop another 30? Do you do that? Or do you
no,
say, you know what, I've got a fantastic piece of real estate here, I know
yes,
the market will come back, I hold it for the long term, I'm just going to ignore what's happening now, because everything passes, Carl.
yes.
After the winter comes the spring, right? Everything passes. And you just have to persevere and keep the long term view in mind. Otherwise, you stand to lose. And you're going to lose money. That's for certain, because you're going to jump to the next best thing. Yeah. Whatever flavor
Yeah.
of the month. And the problem is that the institutional investors are ahead of the game. You're always lagging behind and you buy at the wrong price. Don't do that.
Oh, okay. So they create excitement in the market. That leads us. I guess it's a bit like high street fashion and haute couture, isn't it? The big fashion houses are determining what goes on in the high street. By the time it's got to the high street, it's past the high street, the everyday person buy anyway. Now we're mixing up a lot of metaphors, and I'm guilty of that for sure. But I do like your metaphor of the car. And what I'm gleaning from what you've said is that yes, there is a time to look under the bonnet. There's a time to fill up the car with fuel, but there's also a time to drive to where you're going to and not to keep tinkering with the vehicle. So
Absolutely.
choosing wisely, then closing the bonnet, getting in and driving and going on a long journey is the gist that I'm picking up here, right? Rather than
Uh,
getting your head turned constantly by someone sending you a WhatsApp message or an email, you should invest in this. That's not the place to be, in that state of constant panic and being attracted to, like a magpie, to every other product that comes along.
well, the most famous investor, Warren Buffett, he
Yes.
says, whether the market goes down or goes up, I win. If the market goes up, fantastic, I'm making money now. If the market comes down and I think that its assets are undervalued, I buy more.
Yeah. Yeah.
He buys more because he's thinking about the long term. He's not thinking about 3 years, 5 years. He said, if it goes down, I keep buying
And
because
this is an
I'm averaging down. I
okay.
keep
This is a
buying. Yeah,
sorry to interrupt. This is a fiduciary wealth management ethic, though, basically, isn't it? So choose wisely in the first place. Consider calmly and quietly and wisely your investments, and then go for a long-term view. What else can we say, Matt, to people about the ethics and positioning of FWM?
The ethics and positioning. What a question, Carl. I guess to lead on from what we're saying is to continue that that it is a kind of long term view, not just in your investments, but in what you do. And I guess that's our relationships with our clients. It's not a short term relationship. We want a kind of long term relationship with our clients. We want to build on that and build that with the expat community as well. So I think there's a nice kind of link in that. And you're right, with the investments, they still need to be looked at in the sense that we say, don't panic. But if you've got an awful investment portfolio just sitting and waiting, then nothing's going to happen. But if you bought strong assets in the first place, then don't panic. So I think it's worth people, reviewing what their portfolio is in. But a review is not a panic. And it's interesting you said the magpie, because I was thinking quite that. People see, the shiny new thing and say, right, I want that, I want that. And they're going to make a mistake because they're going to sell a good asset and buy a poor one. So it's not one mistake, it's two mistakes. So it's, people have to be sensible and they need to be working with someone who understands what they're doing and that they can trust and work together.
Brilliant. Superb. Okay. Anything you want to add to that, Paul?
No, the only thing I would say is from experience, particularly during these turbulent times, what you find is the client says, "But why would I lose money? And I can get more if I buy bonds." Or and you hear the wrong thing, rather than you know um, the market will turn round. I've got the right asset classes here. I'm going to make money. It's all about the here and now, and it's part of the society we live in, where people want instant gratification. And people don't realize that markets come in cycles,
Yes.
and because the market has been doctored through quantitative easing since 2008 doesn't mean that that's normal.
Yeah.
I mean, the market has to go through its cycle, and if you're holding the right asset classes, because the market doesn't recognize, because it happens, some asset classes are overvalued and some are undervalued. If you're holding undervalued assets, because the market doesn't recognize that the price should be higher, because remember, the market is a reflection of individual buyers and sellers all the time.
Yes.
So it doesn't always reflect fair value. That doesn't mean that you just have to throw the toys out of the pram and dispose of the asset and say, yeah, but it's not, nothing is happening. No, correct, nothing is happening. And that's why you make money when you stick it out, yeah? And
Yes,
you
indeed.
hold on to the assets that are going to drive the returns.
All right, Randy agreeing. Don't panic. It's very important. And even more important is to have an exit strategy. Anytime you buy an investment, you should know exactly when and why you should sell that investment. Simply thinking buy and hold isn't enough. Would you agree?
Completely. I think
Okay.
completely, because, for instance, let's give you the example now of equity markets and precious metals. Yeah, there's a time for equity markets and there's a time also for precious metals. When the market collapses, we think there's still some way to go, and precious metals go up. You take advantage of the increase in price of the commodities complex generally,
Yeah.
precious and industrial metals. You sell. You never know when you reach the top, but you sell at much higher levels, and then you buy the equity market at discounted prices. So Randy is completely right in saying that there has to be a plan and a strategy.
Yeah. Okay. Thank you for that, Randy. Thank you for joining us this morning. And we will live stream on YouTube and Facebook. So you can join us live and ask your questions. And you can also ask questions in the comment sections of both Facebook and YouTube in the future. And we'll get back to you on any questions or comments that you have. Got a lovely testimonial from one of your satisfied customers here. People can see this as a matter of record on your website. FWM are extremely knowledgeable, and the advice and guidance I've been given regarding relocating, tax planning, pensions, and investment options has been without a doubt the most in-depth. How about that? That's a great testimonial, isn't it? And most in-depth by far. These are uncertain times, continues Gemma, and knowing a reputable company like Fiduciary is looking after me fills me with reassurance. Isn't that a lovely testimonial there? Gemma, a satisfied customer. You can read more testimonials like this at Fiduciary Wealth Management's website, and the address for that is fiduciarywealth.gi there. Gentlemen, we could talk more. I think we could go into greater depth about the world markets, and there'll be more to say about your company and your approach. But perhaps we can just rest assured that we're coming back next week. We can take questions next week, but maybe a final word from both of you. I'll start with you, Matt, first, if I may.
Yeah, no, I think this is a starter for us, Carl, and we want to give value to people, and so I would, urge people subscribe or put it in their diary for a week, and hopefully, we can share our knowledge with people, and that's what we're here to do.
Fantastic. Thank you very much, Matt. Paul, we don't mind a bit of a challenge either, do we? We have had spicy conversations in the past. You don't mind a bit of that, do you? If people have got some ideas that they want to share?
Absolutely. We had this discussion with this lady regarding modern monetary theory and all that. So look, we're open to a debate. We can bring in guests if you think that would spice up the podcast. So having different views is not a bad thing. The more you know, you don't know, right?
Very good. Excellent.
So what I would say in addition to what Matt has just emphasized is that we are reaching out to the expert community generally. So any orphaned clients out there, meaning orphaned by they have no advisor, we can help. Anyone who's dissatisfied with the advice they receive, their investments, we can help them. Anyone who's never used an advisor before, we can help them. And anyone who's planning to move or is just relocated, we can help them. Just get in touch and we can give them a second opinion at no cost. We are very old-fashioned and proactive when it comes to advice. And for us, personal relationships is at the heart of what we do.
Yeah, there you go. As you can see on the screen there, at fiduciarywealth.gi, and dedicated to helping expats and their families. That's what you'll find if you go to fiduciarywealth.gi. Thank you, Matt. Thank you, Paul. Great to speak to you. Looking forward to speaking to you again soon.
Thank you, Carl. See you next week.
Bye for now. See you then. Ciao, ciao.
Bye.